I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, the Federal Reserve finally did the thing. In August, Fed Chair Jerome Powell delivered the magic words. Time has come for policy to adjust. Euphoria was in the air. Champagne bottles were cracked open. The young kids at Wall Street danced the Charleston. But would he do it? He did. For the first time since the onset of the coronavirus pandemic, the smartest men and women inside the Eccles building pulled the trigger on a half-point rate cut, lowering the benchmark federal funds rate from its 23-year high of between 5.25% and 5.5%.
By half a percentage point.
The central bank is now on a crusade to lower interest rates and inject the economy with some easy money, as it shows signs of slowing down, whether it's a cooling labor market or stalling consumer demand. Some say the Federal Reserve was behind the curve and is late to the ball. Others think the Federal Reserve can walk at its own pace down the stairs, as the institution has all the time in the world to be precise and conservative on its way to loosening monetary policy. But after more than 2 years of elevated interest rates, will it matter? Well, yes and no. For Main Street, the cumulative effects might be observed a year from now. Mortgage rates have already started trending downward, falling by around 1%. Indebted credit card holders could see a tepid drop in their interest rates by the time Christmas arrives. Likewise, car loan rates, which have been through the roof in recent years, which you can see on the front page of libertynation.com, could dip at a modest pace. Savers who have enjoyed the best returns on their savings, certificates of deposits, or money markets in 15 years will be penalized. But in this economy, who has been saving? The personal saving rate is below 3%. Ultimately, the initial rate cut will not swallow the record amount of red ink that has flooded Main Street, but consumers' excessive borrowing costs could start seeing relief by next summer. What about for Wall Street? This is the $64,000 question. On the one hand, the stock market has ostensibly ignored high interest rates, with the nominal, non-inflation adjusted returns hitting all-time highs. Leading up to the September policy meeting, the leading benchmark indexes, from the blue-chip Dow Jones Industrial Average to the tech-heavy Nasdaq Composite Index, have recorded double-digit year-to-date gains. Financial conditions are as loose as when the central bank started raising interest rates in March 2022. On the other hand, the verdict on whether stocks benefit at the onset of the cutting cycle is mixed. The stock market benefited greatly in the 1990s and at the beginning of the pandemic when the Fed cut interest rates. It did not do so well in 2001 and 2007. Theoretically, however, says law tells us that the closest to the money spigot benefit the most, with the equities arena situated in proximity to the Fed's printing press. Oh, that reminds me. The Fed's money supply has increased nearly 2% since February. So, what now? Well, first, critics can wag their fingers and tell the monetary authorities that they should have curtailed their $6 trillion of stimulus earlier than when the Fed did, or should have front-loaded the rate hikes. The second is waiting to see if the Fed will resuscitate inflation spirits as the central bank did in the 1980s. The numbers indicate that inflation is following the exact same pattern from 40 years ago. As the saying goes, history may not repeat itself, but it certainly rhymes. Third, what about the recession? Economist Peter St. Onge recently wrote on X, quote, "If Jerome Powell cuts 50 basis points, he knows it's a recession. If he cuts 25 basis points, he's in denial." That's it from this week. Please read my full Swamponomics column on the pages of libertynation.com, and be sure to check out my previous Swamponomics TV videos and interviews. Liberty Nation does not endorse candidates or campaigns or legislation, and this presentation is no endorsement. Thank you. I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.